So today's Fed day, big day in the market, but does it really matter? So the market is already anticipating almost more than 90% that the Fed is going to cut rates today by a quarter point. That's been priced into the market for quite some time. What the market is going to be looking at is what happens after the rate cut and what's going to be the forward thinking of the Fed after the Fed rate cut and what Jerome Powell says after the Fed rate cut in the press conference. That's going to be the topic of discussion. That's what everyone's going to be looking for. The other thing to keep in mind is, are they going to pause moving forward in the near future? Will we see a rate cut in January? My gut is telling me that we're going to see a little bit of a pause. I think the Fed is going to kind of raise expectations of where they think inflation will be next year. I think they're going to try to reset expectations for the market of how many rate cuts that we'll see in 2025. I think it's going to be less than what the market has been pricing in. And I think the Fed's job in this meeting is going to be to pull back some of those expectations. The Fed never wants to surprise the market, and they're going to do everything they can to try to make what happens with their policy decisions something that the market is expecting. They do not like to surprise the market. Now, the other thing that we have to think about is what's the messaging? What is the messaging that the Fed is trying to get, and how does that impact mortgage rates? Well, mortgage rates are going to look heavily at what happens after this Fed rate decision. So it's going to be important to kind of see what happens, and we'll have to keep an eye on that. The other thing is, we have some really important data that's coming out on Friday. The main data point that the Fed looks at for inflation comes out on Friday. So how does the market react on a Wednesday knowing that Friday is a big number that's going to determine future rate cuts? So that's an interesting piece of the puzzle that is going to have to play out. So maybe there's not a big reaction if the Fed doesn't do too much during this press conference. The other thing was we had some strong retail sales. Again, that is something that could be inflationary. Unemployment data has been strong. We've seen the unemployment rate tick up, but a lot of the employment data has been rather strong, so that creates inflation. The more people that are working, the more they're spending money. That's where retail sales comes in. That's where inflation comes in. And then the other big thing that you have is you obviously have a new administration coming in January. So we're going to have a lot of news that's going to be coming down the pipeline regarding, tariffs and all these things. And the market is going to be trying to position itself ahead of that. And it's always dangerous to kind of guess where things are going to go when you have so much data down the line. The market's looking way beyond today. Today is a foregone conclusion. The market's really going to be positioning about what's going to happen in the future. And that's where we're going to see most of the data. If my personal opinion, I think it's going to be hard for the market to make any big moves here. We're on the higher end of the range, just below 7% on a 30-year fix.